In a shocking move that has sent ripples through the global economic landscape, Saudi Arabia has reportedly decided to abandon the U.S. dollar in favor of the Chinese yuan for pricing its crude oil exports. This decision, which flies in the face of decades of strategic alliances and economic ties, has ignited fierce debates and drawn sharp criticism from all corners. The U.S., already embroiled in a bitter trade war with China and facing mounting economic challenges at home, now finds itself staring down the barrel of a potential economic shift that could undermine its dominance as the global financial leader. The move has been perceived as a bold slap in the face to the U.S., highlighting the kingdom's growing impatience with American policies, particularly the stringent sanctions imposed on China. Critics argue that this could be the beginning of the end for the U.S. dollar's reign as the world's reserve currency, a scenario that could have devastating repercussions for the American economy. The backlash from Washington has been swift, with high-ranking officials condemning Saudi Arabia's actions as reckless and dangerously short-sighted. Meanwhile, supporters of the decision see it as a necessary step towards a more multipolar world, where the stranglehold of Western economic power is loosened in favor of a more balanced global order. This provocative shift not only questions the very foundations of the U.S. Saudi alliance, but also signals a potential realignment of global economic power towards the East. The geopolitical and economic ramifications of this decision will be far-reaching and deeply transformative. Stay with us till the end as we unpack this explosive development and its implications for the future of global finance. Hello and welcome back to Innovative Check YouTube channel, where we delve into the innovative and transformative projects changing our world. If you're new to the channel and enjoy learning about innovation stories around the world, you've come to the right. Please subscribe, like, and comment to help boost our videos on YouTube. Social media platforms recently lit up with rumors about a supposed 50-year-old Petrodollar agreement between the U.S. and Saudi Arabia. The claim suggested that Saudi Arabia was bound by this agreement to price its crude oil exports exclusively in U.S. dollars, and its alleged collapse was predicted to significantly impact the U.S. dollar's status as the global reserve currency. Market Watch reported on these rumors, prompting a flurry of discussions and debates online. Despite the buzz, experts from Wall Street and foreign policy sectors have debunked these claims, asserting that such an agreement never existed. Gregory Brew, an analyst at Eurasia Group, emphasized that the evidence supporting any form of a conspiracy is thin to non-existent. Brew highlighted that historical records clearly show both American and Saudi officials were primarily concerned with the economic impact of Saudi oil surpluses in the aftermath of the global oil shock, rather than any binding currency agreement. The rumors also included speculation that Saudi Arabia might replace the petrodollar with the Chinese yuan, signaling an economic pivot towards East Asia and away from the U.S. However, experts have cautioned that the situation is more complex than it appears, so there are indications that Saudi Arabia is more open to accepting other currencies for its oil sales. The country's deep economic and military ties with the U.S. make a complete shift unlikely. In fact, relations between Riyadh and Washington have shown signs of improvement. Gregory Brew took to X, formerly known as Twitter, to debunk the idea of an expiring U.S.-Saudi agreement, triggering the end of dollar dominance, calling such claims total nonsense. Paul Donovan, chief economist at UBS Global Wealth Management, echoed this sentiment, labeling the rumors as fake news in a blog post. Just a quick reminder to hit the like button below. YouTube has been restricting my videos a lot recently because of bots, so your like does help out this video massively in terms of the algorithm in YouTube. Donovan confirmed that an agreement was indeed signed in June 1974, but it had nothing to do with currencies. This agreement, known as the United States-Saudi Arabian Joint Commission on Economic Cooperation, was intended to last 5 years but was extended multiple times. Even after the 1974 agreement, Saudi Arabia continued to accept other currencies, such as the British pound, for its oil. The closest arrangement to a petrodollar deal was a confidential agreement from late 1974. This deal involved Saudi Arabia investing billions from its oil sales into U.S. treasuries in exchange for military assistance and equipment. Despite these revelations, the speculation about Saudi Arabia's intentions persists. Observers note that while Saudi Arabia may explore diversification in its currency acceptance for oil sales, its reliance on the U.S. dollar is deeply rooted in broader economic and strategic considerations. The country's economic policies are influenced by its long-standing relationship with the U.S., which includes significant military support and investments. The dynamics between major players like the U.S., Saudi Arabia, and China continue to draw intense scrutiny. The rise of China's economic influence and its push for the yuan to play a more prominent role in international trade have fueled discussions about potential shifts in global currency usage. However, experts argue that such changes are gradual and influenced by a multitude of factors beyond bilateral agreements. If you are enjoying this video so far, please don't forget to subscribe, share the video, and comment. Amid the swirling speculation, it is crucial to understand the broader geopolitical context in which these rumors have emerged. The U.S. Saudi relationship has long been characterized by a strategic alliance that goes beyond mere financial transactions. This partnership, forged during the Cold War, was built on mutual interests that included securing stable oil supplies for the West and providing security guarantees to the Saudi kingdom. The 1974 agreement, while not about currencies, exemplified this cooperation by fostering economic ties and military support. The global economic and political landscape has undergone significant shifts. China's rise as a major economic power and its Belt and Road Initiative have expanded its influence across Asia, Africa, and beyond. This has led to a reconfiguration of alliances and trade partnerships, with many countries looking eastward for economic opportunities. Saudi Arabia, with its strategic location and vast energy resources, finds itself at the crossroads of these global shifts. The notion that Saudi Arabia might pivot away from the U.S. dollar towards the Chinese yuan reflects a broader trend of diversification in global finance. As China continues to expand its economic footprint, it has sought to internationalize the yuan, encouraging its use in international trade and investment. This strategy includes establishing yuan-denominated oil contracts and creating financial infrastructure to support yuan transactions globally. For Saudi Arabia, the potential benefits of engaging more deeply with China are evident. China is not only a major consumer of Saudi oil, but also a significant investor in the kingdom's Vision 2030 initiative, which aims to diversify the Saudi economy away from oil dependency. This economic diversification plan includes developing new industries, such as technology and tourism, and creating jobs for the growing Saudi population. China's role in this vision is pivotal, providing both financial investment and technological expertise. However, the transition from the U.S. dollar to the yuan, if it occurs, would be gradual and fraught with challenges. The U.S. dollar remains deeply entrenched in global trade and finance, serving as the world's primary reserve currency. This dominance is underpinned by the stability and size of the U.S. economy, its financial markets, and the trust placed in its institutions. Any significant shift away from the dollar would require not only economic adjustments, but also changes in the financial and regulatory frameworks that govern global trade. Moreover, the U.S. has a vested interest in maintaining the dollar's primacy. The advantages of dollar dominance include lower borrowing costs for the U.S. government, greater economic leverage in international affairs, and the ability to impose financial sanctions effectively. These sanctions, often criticized by other nations, are a key tool in U.S. foreign policy. For Saudi Arabia, aligning too closely with China could complicate its relationship with the U.S. and invite repercussions that might affect its broader strategic interests. Despite these complexities, Saudi Arabia has shown a willingness to explore alternative economic partnerships. The kingdom's growing engagement with China, Russia, and other non-Western powers is part of a broader strategy to hedge its bets and reduce its over-reliance on any single country. This multi-vector approach aims to maximize economic opportunities while maintaining a balance in its international relations. As the debate continues, it is essential to recognize the interconnectedness of global financial systems. Decisions made by major economies like the U.S., China, and Saudi Arabia have ripple effects that impact markets, currencies, and international trade. The U.S. sanctions on China, for instance, are part of a broader strategy to counter China's economic and technological rise. These sanctions affect not only bilateral trade, but also global supply chains and financial markets. In this context, Saudi Arabia's potential move towards the yuan can be seen as both a strategic and economic decision. It reflects the kingdom's desire to diversify its economic partners and reduce vulnerability to unilateral actions by any one country. However, this shift if it materializes, will be nuanced and carefully calibrated to avoid jeopardizing its long-standing ties with the U.S. The discourse around the petrodollar and the potential rise of the Yuan highlights the evolving nature of global economic power. As countries navigate these changes, they must balance their economic interests with geopolitical realities. For Saudi Arabia, this means leveraging its strategic assets, such as its vast oil reserves and pivotal geographic location, to maximize its influence and secure its future. As we delve deeper into this topic, it's important to consider the broader implications of such a shift. The potential reconfiguration of global financial systems, the impact on international trade, and the strategic calculations of major powers all play a role in shaping this narrative. While the rumors of a sudden collapse of the petrodollar may be exaggerated, the underlying dynamics driving these discussions are real and indicative of larger trends in the global economy. The evolving relationship between Saudi Arabia, the U.S., and China will continue to be a focal point in international affairs. Each country's actions and policies will influence the global balance of power and the future of international trade. As such, it's crucial to stay informed and critically analyze these developments, understanding the historical context and the strategic interests at play. While the rumors about Saudi Arabia replacing the dollar with the yuan may not be entirely accurate, they do reflect broader economic and geopolitical shifts. These shifts are driven by the changing dynamics of global power, the rise of new economic players, and the strategic calculations of nations seeking to secure their futures in an increasingly interconnected world. The interplay between economic interests and geopolitical strategies will continue to shape the narrative, making it a topic of ongoing relevance and importance. Thank you for your attention, and I welcome your thoughts and questions on this complex and vital subject. Do you want to watch more videos like this one? If yes, please like and share the video and subscribe to get exclusive videos about how phenomenally China is developing and growing its influence. Your subscriptions and likes motivate us to generate more content, so please keep supporting us. Check out this video showing on your screen right now, and I will see you on the other side.